Thank everybody. Thanks for joining us online and here in person. This morning is very rainy here in New York, so we appreciate the effort for the colleagues coming in as well in person. Just before we start, a couple of logistical points. Good morning. The session will be about an hour and 15 minutes, so we'll go up to 9:45 New York time. And we have around 100 registrants. I know people are coming in online, and our colleagues, our co-host of the events, the Global Donor Platform for Rural Development, is working on the back end to ensure that everybody is joining. The session today will start with an opening statement, followed by a panel discussions, after which we'll move into an interactive session. So in case you have questions in the room or online, please raise your real or virtual hand, and we will make sure to address your questions. We also have a Q&A function and the chat, so please feel free to also write your question there. And the event, I believe, will be recorded for dissemination purposes. We'll just get started. My name is Elena Bertusi. I am Partnership Officer here in the IFAD New York Liaison office in New York. It's a pleasure to welcome everyone to this Fin4Dev dialogue during the Financing for Development Forum. Again, I would like to thank my colleagues of the Global Donor Platform for Rural Development who are joining us online, who are the co-hosts of this event with IFAD. It's always a pleasure to work with the team. The event, as I mentioned, takes place during the ECOSOC Financing for Development Forum as a key policy space to discuss coordinated policy and financing responses to trade and energy shocks affecting global food systems. This conversation is anchored to the Seville Commitment, which calls for stronger international cooperation, more coherent policies, and scaled-up, predictable financing to safeguard food security and build resilient agri-food systems in the face of growing global volatility. As you all know, today's agri-food systems are operating under unprecedented stress as tariffs, trades, tensions, and energy market shocks disrupt supply chains, raise costs, and reduce the predictability for governments, market, and consumers. The pressures are hitting the hardest in countries that are dependent on food imports, and volatile energy prices are threatening food affordability, straining public budgets, and putting rural livelihoods and food security at great risk. Recent trade and energy disruptions have exposed structural vulnerabilities in global agri-food systems, underscoring the need for greater resilience, policy coherence, and smarter risk-sharing mechanism. In this session, we will have policymakers, financiers, and sector leaders who will explore how better coordination across trade, energy, and agricultural policy, as well as more cohesive financing approaches, can help stabilize agri-food systems in an increasingly uncertain global environment. Without further ado, I would like to invite Mr. Leonard Mizzi, Advisor for Food Systems of the Directorate-General for International Partnerships at the European Commission and GDPRD co-chair. Leonard, over to you.
Thanks, Elena, and thanks to many colleagues online and in the New York constituency. Here in Brussels, for a change, we have sun, and we would like that this session also brings a sign and a sense of hope in what many speak about polycrisis or perfect storms. But perfect storms and polycrisis have been with us since quite a number of years, since at least 20 years, just to recall the food crisis and the financial crisis, 2007, 2008, COVID, the aggression of Russia on Ukraine in 2022, and now the Middle East. So I would say we would like to hear also from all of you how we can come up with solutions. And that is a bit the role of the Global Donor Platform, is to be action-oriented, targeted with solutions. We know what the markets are telling us, including the energy and the transmission effects. You will hear more about this in the panel debate. There are lots of studies and updates being issued by FAO, by IMF. There were the IMF World Bank meetings a week ago. You know what came out from the WTO ministerial. So I don't want to repeat what I call the macroeconomic dynamics. We know the situation is tense. It's under pressure. Food systems are under severe pressure, although prices, as you know, are not showing the same evidence of volatility as yet, depending also on how protracted the crisis is. Yes, fertilizers are and will be impacted, but everyone is monitoring how close the ceasefire and a solution which should not hopefully take too long to be resolved. Otherwise, there are clear mega risks that go beyond the Gulf countries. Just also to recall and to remind that the Global Report on Food Crisis, which is a flagship report that the European Union also is actively involved in, also with FAO, WFP, and other partners, will be unveiled on Friday in London. And there you will have the latest state of play on the IPC +3 and acute hunger hotspots, how things are evolving. So just a bit of a solutions-oriented approach that, as co-chair also with Thijs and with our Dutch colleagues and within the global global donor platform, we want to convey. First of all, multilateralism should be at the core of solutions. We support fully the UN Secretary-General Task Force. We clearly need to avoid fragmentation. We need to enhance coordination in a context where ODA is under a lot of pressure and where we need to find innovative solutions. And thanks to the IFAD, thanks to the PDB network, the Public Development Banks network, and the Agri network of the public development banks, that we need to be close to the sector. It's not automatic that the agri-food sector interfacing with the energy and the trade sector is given the necessary top priority in terms of solutions and scalability. So that's the first thing. We are in a context where from the New York and we are waiting for the UN@80 reform process and solution. So that is important. What will come out of the UN@80 in terms of efficiency gains? Everyone speaks and wants efficiency gains, but we need also to see where the efficiency gains land, how they are landing, to have better coordination, better alignment at country level, and in a solutions-based approach. This is important because the ODA space also for multilaterals is shrinking. Clearly, that humanitarian supply chains are not disrupted. The last thing we want is a disruption of humanitarian supply chains in the context of the Middle East crisis. So that's a top priority that I'm sure some of you will refer, and this will be also discussed in detail at the launch of the global report. Finance. We can't emphasize the role of finance, innovative finance, and clearly, as European Union, what we are trying to build up is the context of the global gateway in terms of a 360 approach, where we have a holistic approach in de-risking at scale around strategic corridors, around specific value chains, including on fertilizers. Something that is important that also hopefully this discussion and also the global donor platform looks at is how do you wean yourself off fossil-based industry, including an agri-food sector? How do you become less dependent on fossil fuels and go into more biofertilizers and the green ammonia? I did some sort of research, and there are lots of case studies and initiatives, private sector initiatives at scale. The question is, who will benefit in terms of the equity dynamics of green ammonia, and how scalable some solutions are also for the benefit, say, of the African continent. The experience also of a few years ago showed that in terms of export potential, it will be the hub and spoke approach, meaning that export potential might go to the EU or to the US or to Asia, but not necessarily stay in the African continent. I think it's important that we analyze, we assess how a clean tech and a sort of more sustainable agri-food system also benefits the poor, the small holders, a woman lens approach, but also youth. Making a reference a bit to Ethiopia, because I understand that there will be a speaker from the Ethiopian Perm Rep, the delegation, is that these days our Commissioner Sikela, is actually visiting Ethiopia, where we are unleashing the full potential of, again, budget support to digitalization, support to connectivity, and also agricultural value chain. So I think it's important also to use the global donor network with all of you to come up with country REC, the regional economic community solutions at scale, and really go into specific details. What can we do better in terms of like-minded partners around specific corridors, whether it's Lobito corridor, or whether it's the Northern corridor, or the Western African corridors? If I speak about Africa, what can we do around the small island developing states? I think we need to come with solutions on a transitioning of transformed agri-food systems, which are less dependent on fossil fuels. And clearly, the trade integration effect. We know that there is a lot of pressure and pressure points on trade and trade frictions. This is the last thing we want in terms of the multilateral community, and we need clearly to focus to make the African continental free trade area a robust continental area for growth, for regional integration, and this should be a priority for all. So some pathways of way forward, I would say enhanced and targeted coordination in the UN space, demonstrate impact on the ground, whether it's Ethiopia, Cote d'Ivoire, Cameroon, or small island development states in the Pacific or the Caribbean, show impact, scalability, and do the de-risking with the financial institutions and with the IFADs, the World Banks, the EIBs, the ERBs of this world, address bottlenecks, and that's why we also support SDTF in terms of trade integration effects, and also come up with really scalable solutions which are visible, which are communicable, that also our political masters can communicate and show that agri-food is not a sector which is lagging behind compared to, say, the energy, the digital, or the critical raw material sector, or the pharma sector, that there are good case studies that we can also congregate companies and corporate interests to actually invest and de-risk the agricultural value chain. So I'm looking forward to the deliberations, and if we can come up with a solutions-based approach in the coming weeks and months, that would be the purpose of an event like this. Over.
Leonard, thank you so much for setting the scene and posing some good questions and paving the way for the panel discussion. I appreciate you going from a global but also a local perspective, regional perspective, which I think is important also for our colleagues in the room and online to react to, and for the panel discussion itself. It is now my pleasure to introduce you to the panelists we have in the room and online. First of all, welcome Ambassador Tesfaye Yilma Sabo from the Permanent Mission of Ethiopia. Welcome, and thank you for joining us today. Then we have Mr. David Laborde, Director, Agri-Food Economics and Policy Division of FAO, joining us online. Good morning, David, or good afternoon to you. Ms. Marlynne Hopper, Head ad interim of Standards and Trade Development Facility Secretariat at WTO. Good afternoon to you. Ms. Courtney Hood, Head of Office here at our IFAD, the New York Liaison Office, and Mr. Rodrigo Carcamo, Chief ad interim of the Agricultural Commodities Section, Commodities Branch of UNCTAD. Welcome, everyone. Thank you for joining us online. I will kick off the panel, Excellency, with yourself, if I may, with the first question. Just a quick reminder for all, just to make sure that we manage to have an interactive discussion and allow our audience also to intervene and ask you questions. If you can keep your answers to 2 to 3 minutes, and we'll try to do 2 rounds of questions. So, Excellency, my first question is for you. What type of policy instruments or safeguards have proven most useful for Ethiopia in managing food security risks during periods of global uncertainty? Ambassador, over to you. Thank you. Good morning again.
Well, thank you. I was just coming in, and before I could find my seat, speaking at the panel is a privilege. Somebody from my mission was prepared to join you today, but because of unforeseen circumstances, I happen to be replacing. Now, I'm very, very grateful to you for organizing this platform. IFAD partner, role-based organizations are always very close to us, the UN entities over there. In terms of policy, I was a bit provoked to speak when the previous speaker mentioned, the current crisis. It's a very, very difficult cocktail of crises that we are facing today. Fertilizer is just one dimension. In the market, when fertilizer is inaccessible, it's very obvious what would follow afterwards. But then again, even if we access fertilizer, if we arrange a system where we can access fertilizer through the Strait of Hormuz, how are we going to get it to the farmers if we don't have access to fuel? Decarbonization and all that is a topic for tomorrow. But today, we operate on that. Trucks, vehicles need to take those fertilizer from the port to the villages, to the farms. So there will be just a heap on the port or on the stores without simultaneous access to fuel tankers that are destined to those countries. Who are given access to fuel. That needs. I made this point to the task force last time, but we need really to have a good understanding of this. We don't access fuel, it will be half the fertilizer initiative. In terms of Ethiopia, I'm very grateful personally to the European Union for the support, as mentioned by the previous speaker. It's a very quality supporter partner for us in terms of food security and other things. And supporting through the budget system is strengthening ownership of the processes. So in that regard, I'm very grateful. Otherwise, this is a homegrown dimension of it. We have, we always had smallholding farmers in Ethiopia. Millions of them around the countryside. So when the rains fail, these people had always been vulnerable and they used to be a humanitarian case. That's the history. A very, very concrete example. Now, small holding, two things have changed, really. One, small holding, when the rains are not sufficient, the development agents, the extension workers, have assisted them to produce sweet potato. If the rains are not sufficient for growing depth or weight, then they are sufficient to grow at least sweet potato and they can survive. So the old style, famine situation is not much apparent, much existent these days because of this kind of change. Two, we have the new policy issue, the clustering. I'm sure you are very well aware, the clustering of smallholding farmers. Before farmers, smallholders were very attached to their plot of land. So clustering was an impossible task. But in the last 6 years, we've succeeded to convince smallholding farmers to cluster their plots together, so that it's now easier to provide service, easier to provide technology, easier to provide finance. Then they organized by way of unions. Then they distribute the fertilizer system. They have a better marketing position. So that's the policy behind the wheat. I can call it miracle that's happening in Ethiopia.
So if I can ask you to wrap up, and then we can come back to you for a second round of questions, just in the interest of.
Okay, that's a homegrown solution that we found in the country. We own it. It requires a lot of leadership at every level, at the federal level, at the local level, at the village level. Without follow-up, it just disintegrates. The exact size of the plot has to be properly located. And then convince the smallholders to cluster their plot together with others is not a very simple task. So that policy has worked. Now it's being scaled up across the country. And I think more and more developments are expected to happen at the level. Let me stop here and wait for questions to come.
Thank you. Thank you very much, Excellency. And thank you for bringing in the experience of Ethiopia and the role of smallholder farmers and how you have worked with them to ensure that they are less impacted by the current crisis. David, online, I would like to continue with you with this question. We've experienced numerous global shocks over the recent years, including COVID-19, the war in Ukraine, Black Sea disruptions, and repeated supply chain shocks. Yet, similar policy responses keep re-emerging. In your view, are lessons from past crises being sufficiently incorporated into the current policy and decision-making processes? Over to you, David. 2-3 minutes for you as well. Thank you.
Yes, no, thank you. As you have reminded us, and as Leonard also have said, in the last 10 years, we have seen a succession of large-scale shock and crises. That, on one hand, has still shown how resilient our overall agri-food system. I mean, we have seen tremendous shocks, and we have not ended up in famine like in the 80s or 70s. So it proved that our system is better than 30 or 40 years ago. Now, in terms of policy response, that's where I think that they still see slow learning when we have evidence. But at the same time, I'm not sure if it is slow learning or just the basic reality of how country operates. The first reaction is to protect your own country and your own people. And that can individually make choice, but collectively is a problem. And that's why in all these crises, we have seen export restriction being used. Export restriction on fertilizer, export restriction on food. Even when we were in COVID-19, where actually the problem was not to keep things at home, but to keep things moving. And so we have seen countries starting to put export restriction and then saying, oh, finally, this is not what we need. Or we've seen the same thing in Ukraine, the war in Ukraine. The first reaction from the Ukrainian government was to put export restriction on food and wheat. And then 2 weeks after, or 3 weeks after, they say, no, actually, we still need to trade to get revenue. So what I think has improved is this actually people starting to change their mind a bit more quicker. Starting to say, based on the evidence, based on the evolution, if the first response is not the best one, we can start to adapt. But still, we have these old demons that are still inside, people. The devil is here. Let's think selfish. But when we have a global problem, selfishness is not an option. Or if it is an option for the powerful, it's going to mean that it's all the other countries that will have to adjust. The most vulnerable. And I think that in terms of development, that's a major concern. We cannot ask the poorest country and the poorest people to be the adjustment variable of the system. And that's what we are seeing today, unfortunately. We see problem of energy, starting problem of fertilizer, rich countries saying we are going to pay for it, large emerging country also saying we are going to pay for it, or we put export restriction, and you ask smaller, more vulnerable countries in Africa to be left behind because they will not have the money or didn't have the market power to enforce what they need. So that, I will say, my main frustration. How we know that we can better cope with the shock when we develop a collective answer, and actually that's what was done by the world for COVID-19 on the vaccine front, a bit of competition, but still a lot of international collaboration. Not always in a more inclusive manner, but still at the end, we developed in 2 years vaccine, and most countries in the world after 2 years had access to this vaccine. So we know that we can develop collective response. But on this energy and food crisis, this is still a bit lagging behind. And we have seen it also in the aftermath, of COVID-19 and the war in Ukraine. Inflation was starting to go up. What the large economy have said, we increase interest rates because we want to kill inflation at home. But what it has created? More debt burden for low and middle income countries. So that's really this question of policy coordination is the place where I think we need to make more efforts, acknowledge the reality also of the pressure that policymakers face, but creating this mechanism where we can cope with this more collectively.
Thank you so much, David, for sharing your thoughts. I just one quick takeaway. I want to take the positive point that you mentioned, the fact that we're doing something a bit better, that we're reacting a bit quicker. Maybe it's not quick enough, but hopefully we'll get better, and that will also reduce the shocks and the crisis that we're all facing in the world. Marlynne, WTO, over to you for the next point. Next question. In the context of growing geopolitical tensions and trade fragmentation, why is the multilateral trading system so important for stability? Marlynne, over to you.
Thank you so much, and good morning, good afternoon, colleagues. Well, I think it matters because it's that stabilizing anchor that's so important, especially at these times of heightened geopolitical tensions, because it's already been mentioned, when trade becomes less predictable, it's producers and businesses, especially the smallest farmers and the micro and small and medium-sized enterprises that face higher costs and uncertainty that threatens livelihoods, jobs and food security. And it's really the consequences that are felt most acutely in low-income and vulnerable countries. So the multilateral system, the rules-based system, really gives that shared framework that provides predictability and trust, and that keeps food and other supply chains functioning, trade flowing, and it reduces the risks of sudden unilateral actions. And I think just to highlight 3 reasons why it's so important, it's the predictability, that shared global framework of rules that apply to all 166 WTO members, large and small. Secondly, it's the transparency and the notification requirements on export restrictions or sanitary and phytosanitary measures, trade facilitation and other areas. And those help to deter the most disruptive policies and allow countries to adjust before crises escalate, as was already mentioned. And it really supports, thirdly, the resilience and the inclusion by ensuring that developing and least developed countries can remain integrated into global markets and avoiding those shocks. And I think Leonard Mizzi mentioned at the start, the crisis a few years ago, humanitarian food aid and trade, and the WTO ministerial as an example, or ministerial decision to commit members not to impose export restrictions on food bought by the WFP for humanitarian purposes. So that's a key concrete measure. But, it's clear that the multilateral system is also under major and significant strains. Unilateral measures, especially tariffs, have increased uncertainty, even if 70% of global trade continues to take place under WTO rules. The dispute settlement system is not working the way it should or the way it used to work. And while reform is on the agenda, including at the ministerial in Yaoundé a few weeks ago, with 166 members, diverse perspectives and diverging views are probably to be expected. So it takes time. But there is, ending with a positive note, there is that shared understanding across the WTO members that the multilateral system and the WTO needs to become more agile and more resilient to be able to address fragmentation and these shifting dynamics, and that the WTO remains very relevant and necessary for our shared global prosperity, especially in these turbulent times. Thank you.
Thank you, Marlynne, for sharing your thoughts and the position of the WTO. I think that the being more agile and resilient is a common aspect that probably many of our institutions needs to look at and improve. Maybe I'll go to Rodrigo from UNCTAD first, or next. For the next questions. We know that UNCTAD closely tracks commodity markets in the current volatile context. What trends are occurring in food and energy commodity prices, and how are this shaping food affordability? Rodrigo, over to you.
Thank you, Elena, and thanks to IFAD for the timely invitation. Yes, indeed, UNCTAD continues to monitor the situation around the Strait of Hormuz. We have seen that there have been a very severe shock to commodity markets. Recent developments have resulted in severe disruptions to the exports of energy and energy-related commodities, including petroleum and gas, fertilizers, in particular nitrogen-based fertilizers, like urea and blends like diammonium phosphate, and key inputs for fertilizer production, for example, sulfur, which is a byproduct of the production of oil. And this has triggered a sharp and very rapid increase in energy and fertilizer, even after the ceasefire announcement that, as you know, was extended today. When we compare, for example, prices before the crisis started in February, we compare April now and January, used price until yesterday, we observed very significant increases. Urea increased 76%. The Asian LNG marker increased by 58%. Petroleum Brent, 55. EU natural gas, 33, 1/3, because they depend less on the region. And the ammonium phosphate, 17%. However, staple food prices have risen much less. For example, wheat have only risen by 16%, maize 4%, and rice actually fell by 4%. One notable exemption in the prices of agricultural commodities that has increased is palm oil, which has risen by 21%, most likely reflecting its use as biofuels, and in particular including the announcement by Indonesia, which is the largest exporter, of moving to a B50 blending mandate. However, why have food prices not reacted yet so strongly? To date, first, global commodity conditions for major staples remain relatively favorable. UNCTAD is a member of the Agricultural Market Information System, AMIS, together with our 9 international organizations, and we monitor this very closely. There are ample stocks, for example, of wheat and of maize, and there have been no major production shortfalls. So this has given to the market this security that prices should not increase yet. However, the situation should not lead us to complacency, because the outlook for food security remains very fragile. So what are the risks that we see for food security and food affordability in general? Even if the conflicts were to end immediately, let's say tomorrow, and transit would fully resume, which is unlikely because the latest data where there was some transit was in 18th of April. There were 29 ships transiting and then it fell back again. So it's not clear that this will renew anytime soon. Even if the conflict were to transit immediately now, high energy prices alone are going to raise food prices. Why? Because food is energy intensive, not only in production, but also in transport. From farm to fork, you need to transfer food from production to destination, and that takes fuel. For example, the price of bunker fuel has increased by 89% during the same period, okay? Fertilizer prices have also risen in several countries, like it was mentioned, including some major exporters. And there's some anecdotal evidence suggesting that farmers are entering into a planting season by changing fertilizer use, reducing it, and switching again from nitrogen-intensive crops like wheat or maize, or in some cases leaving the land fallow. So this has the risk that production in the next harvest is going to be slower. However, there are even additional risks. If energy and input prices remain elevated, we have persistently high transport costs that are already affecting, which could also change trade patterns. And there's also an interaction with the potential El Niño phenomenon, which according to the latest NOAA estimate, it's expected to start emerging in between May and June with a 61% probability, okay? So there's a number of issues happening there. Now, some countries are subsidizing fertilizers already, and like David mentioned, they're already introducing export restrictions. We know of at least 2 significant exporters in the world that have introduced export restrictions for urea and for ammonium nitrate. So this is already happening. And there's finally a lot of uncertainty of what is going to happen and when. So in summary, food prices have not yet fully responded to the shock, and there is a lot of uncertainty about the size of the shock, but the effects are going to be felt. The question is how much. Thanks.
Thank you very much, Rodrigo, for sharing this super interesting data and also reminding us in a way that we don't only have to look at the short term, but also at the longer term impact and how even if things move positively, globally, that doesn't mean that there will still be an impact afterwards. Courtney, back to our room in New York. The next question is to you on how do market and trade shocks that originate far from rural communities translate into the realities on the ground for smallholder farmers. Courtney, over to you.
Thanks very much, Elena. I think as IFAD, we really have a ground level view of these dynamics, particularly with smallholder farmers. And while each shock is slightly different, we see that in each, they transmit quite quickly to domestic markets and then local markets from the global level. And this is particularly important as those local markets are the markets that provide food security in many developing countries. If we take the current crisis as an example, and I think Your Excellency, you mentioned it's a difficult cocktail of crises. I think this is a very accurate and good way to think about it. While we heard from UNCTAD, FAO, others, that it's going to take time for food prices to increase, we're already seeing shocks in rural communities through a few key channels. The first is through rising input costs. We've heard about the impact of fuel cost increases from shortages very vividly by Your Excellency. Fertilizer costs rising in some cases in a matter of weeks. Farm level, these are already threatening the current planting season. So in many areas of Asia, Africa, and Latin America, farmers are deciding now whether to pay more for inputs or to cut their use. And this has implications for both their livelihoods and for yield for some time to come that can't be easily reversed. Small-scale fishers are facing significant difficulty due to fuel price increases. This has implications for their income, of course, but also for protein availability in communities. And sometimes these implications are quite immediate. As mentioned before, we see governments actively intervening with measures such as price or supply controls in many cases. These have varied impacts, sometimes helpful, sometimes restricting supply. And not all governments are able to intervene to the same degree due to fiscal pressures. We also have a market access shock. So in several regions, we're seeing a bit of a double squeeze for small scale producers. Higher production costs coupled with reduced access to export markets. So, for example, in some cases where export demand, like countries who export heavily to the Middle East, where that demand is drying up, we have supplies destined for export redirected domestic markets. That's pushing down the price of some commodities. Meaning that farmers may be earning less even as their input costs are increasing. So we're following that quite closely as well. These forces together obviously are putting pressure on household incomes of rural families who have very little buffer often. We're very concerned about the immediate food security implications, particularly in fragile and conflict-affected areas. But also the longer term impacts. I think all of us have spoken a lot about that today on food security and overall stability. We know these two issues are very linked, particularly as we can expect lower yields and tighter food supply later this year and into next. So I think I would just end this by echoing the concerns of others that we really need to keep a focus on kind of coordinated long-term response while we're also responding to the current shock.
Thank you. Thank you. Thanks to you, Courtney. And thank you also for sharing what is happening a bit, what we're seeing from IFAD side on the ground, and reminding us that for every country, there is a different impact and there is a different solution probably. So we need to keep in mind also that. Now, we are running a bit over time, so I'm gonna try to challenge my panelists for the next round of questions to try to be very, very short with like 1 minute rapid response. So we have also time to open up to our audience with some questions. Ambassador, you're the first to be challenged with the next rapid response question. My question is to you: how can development finance institutions and international partners align financing more effectively with national food security and resilience strategies? 1 minute.
Well, thank you. No, we have already that experience in Ethiopia with the African Development Bank. The National Wheat Initiative has shown miracle in the last 2 years, particularly, because of that support. One, we need to own it. The people, the smallholders to own it. Then financing, de-risked finance. That's good for the locality, should be made available. It's not the big, huge, massive figures that we talk about, billions, 500 billion for the SDG funding or this and that. No, it's the small, targeted, concrete, deliverable financing linked to the national financing institutions. Will help better things.
Perfect. Thank you so much, Ambassador. You're perfectly on time with the minute. So this is a challenge for the other panelists as well to keep on track. And thank you for raising the experience on the partnership with the African Development Bank and how we need to still keep smallholders at the center, work with the country, the governments, and ensure that the even small funding can help greatly on the ground. David, back to you. How can policymakers, in your view, better navigate the trade-off between safeguarding domestic food security in the short term and ensuring stability and predictability in global food markets over the longer term? 1 minute with this loaded question. Over to you.
So the first thing is to guarantee policy stability and visibility. I mean, we are already in a world that have a number of shocks coming from outside the agri-food system and the agri-food system policy. So the point is not to add more policy noise or policy confusion in the time of crisis in particular. As well, reversal of policies, sometimes because you have a change in government is an issue, because it doesn't trigger the type of long-term investment we need by farmers, by the public sectors, by the partner. So really, I will say, that farmers need stability, companies need stability, and in the confused world, bringing policy stability is already very important. And that's a raising problem in the recent years, where it has all around the world, everyone can think about one or two countries in particular, but actually we see it in many countries where we see this significant change in directions, and that's a big issue. So I will stop here.
Thank you so much, David. I think this is a great point. We have generally policies that have been approved, and we should ensure that those are implemented in a way that doesn't disrupt further, and we can work with the experience of the past as well. Marlynne, over to you. This is again a challenge with a long question regarding the Standards and Trade Development Facility, which has long focused on supporting countries to meet international standards. At a time of supply shocks and rising food security concerns, how can SPS systems evolve to strengthen agri-food systems resilience while ensuring that standards facilitate trade rather than create additional barriers? Over to you, Marlynne.
So thank you. And this one is a challenge for me because we have so much work going on in the STDF, the Standards and Trade Development Facility, and that's my day-to-day work. So I have so much I want to say. But the STDF, I think, to keep it brief, it's a multilateral global partnership that was established by FAO, the World Bank, the WTO, and others, and that exists to facilitate safe trade. And it's supported financially, which is critical, by the European Commission and other WTO members. So the focus is on strengthening a capacity to meet the international standards for food safety, animal and plant health that are recognized in the WTO's sanitary and phytosanitary agreement to ensure health protection and also enable developing countries to benefit more fully from trade and contribute to the SDGs. But, SPS systems, they're not static and they must continue, and they're continually evolving, especially in the face of today's challenges and trends. They really need to move beyond being merely compliance tools for trade to become drivers of sustainable development and resilience in agri-food systems. And I think this was highlighted recently in the 2025 World Development Report that recognizes standards as springboards for development. So SPS systems, they need to be risk-based, science-driven. They also need to be collaborative, innovative, inclusive, and impactful. And to support that shift, the STDF strategy for 2025 to 2030 really emphasizes partnerships, collaboration across different parts of government and with the private sector, as well as that focus on innovation, including digital, but also innovative institutional frameworks or ways of working, new technologies, biopesticides, I can't get into that, as well as scaling and investment. So STDF helps developing countries to make this shift, providing small grants for credible investment proposals and funds for these innovative, collaborative, scalable, safe trade projects. And I think one example is the ePhyto solution, the IPPC ePhyto solution, developed through an STDF pilot that's now being used by over 100 countries for the electronic exchange of phytosanitary certificates, reducing the costs and time of trade. And again, we have studies and measurements on that. But the problem is that these systems in many developing countries are chronically underfunded, despite the fact that they're a global public good that underpins trade, food security, and livelihoods. So I think one thing that we're doing now is completing a financing study in the STDF that builds on an official event at last year's Financing for Development conference to explore a more strategic approach to financing and investment for SPS systems. So this will include a closer look at mobilizing non-traditional sources of finance, public and private, including blended and climate finance, to get the investments needed to ensure that SPS capacity is able to step up and deliver what's needed. And I think as the global financing landscape evolves and public resources are becoming much more constrained, the shift is essential, including, more of a focus on trade and how that delivers. So I think the other thing to say is it's not only for developing countries, our focus is there, but more innovation and investments in these SPS systems in developing countries deliver shares benefits for all of us across developed, importing countries and developing countries, lowering trade costs, reducing food loss and waste, and more inclusive, equitable systems, and so on. So thank you so much.
Thank you, Marlynne. Thank you so much for sharing this this experience and the work of the facility. One takeaway is partnership, collaboration, and looking at different type of finance here, which is really important from our side as well. Rodrigo, I will go to you again. If we can keep it to 1 minute, so we can go to our audience as well. Where are the largest gaps in coherence between trade policy, food security objectives, and development finance in the current global environment? Rodrigo, over to you. 1 minute, please.
Thank you. Yes, I'll just mention there because of the time restrictions. I think there are 3 gaps that are actionable. The first one is the stalled agricultural trade rules reform and food security. There's a fundamental disconnect between food security needs of NFIDs, and that is net food imported developing countries, and LDCs on the one hand, and the continued trade distorted domestic support by major producers and exporters. So I think there's a big gap there. However, negotiations have pretty much stalled since the Nairobi conference, and there have been no consensus on MC14, even on a ministerial declaration calling for additional reform. So this undermines food security, in my view, and there's something that collective effort needs to be done. The second gap is the one that David mentioned already: export restrictions amplify negative shock. I think this is a very serious issue. However, export restrictions are perfectly legal. According to Article 11 of the GATT and Article 12 of the Agreement on Agriculture, the only thing you need to do is notify them. And that is how much they're notified, that's another question, but it's perfectly acceptable, and they're widely used. However, these have very severe impacts. There's a lot of studies showing that. And finally, I think there's a gap between development finance and food security. While crisis facilities like the IMF Food Security Window or the World Bank platforms or regional development banks like the African Development Bank have been providing finance for crisis, key gaps remain. Scale, the ability to address persistent price shocks. Persistency in price shocks is the problem. They are not 1 month or 2 or 3. They take a long time. And also limited uptake by LDCs, because these countries have limited fiscal pace, they have high debt, and they have few alternative financing. So there's more that needs to be done along those lines, and I will stop there. Thanks.
Thank you so much, Rodrigo, for bringing these 3 points to our attention, and it's a good leeway to Courtney from IFAD side. How can development financial institutions that are aligned financing instrument with trade and energy realities to support resilience in agri-food systems? Over to you.
Okay, 1 minute. I think there's 3 central issues I'm going to highlight from IFAD's side. One is on timing. So we don't want help set up in a way that it comes too late The other is on alignment. I think we had Adriano from FAO on Monday, an event saying, let's not all see a problem and stand up our own initiatives. So we want to make sure we're coordinating and we want to maintain a long-term perspective. Just maybe a quick example of how IFAD is approaching this in the current crisis. We're coordinating our response to avoid that we're all tackling in isolation. One way we're doing this is engaging as vice chair of the Food Security and Supply Chains Sub-Working Group under the UN Middle East Crisis Development Framework. This is chaired by FAO, and they're bringing together partners across the UN system to assess impacts with rapid speed, align tools, and also keep the international community informed of food security risks. We're also working within our own portfolio to have some proactive early response, first through our crisis response initiative, and this sort of deploys rapid response grant financing that helps protect smallholder farmers and rural businesses. We're also activating flexibility mechanisms that are embedded within our own projects that help move financing around between different budget lines, accelerate disbursements, and we're liaising with other NDBs on kind of sharing good practice on doing that well and quickly. And then finally, just to mention that IFAD's entering our 14th replenishment, and we're really looking on the long-term end to leverage our concessional financing as more of a global long-term investment platform. So looking to bring in partners, use our concessional finance more catalytically, as was mentioned, to bring in private capital, de-risk investments into underserved rural areas. We're expanding very much our partnerships, in particular with multilateral development banks, with national development banks. Your Excellency, you mentioned national partners as very important. We have the AgriConnect initiative through World Bank also that's bringing together multiple partners. So really trying to work together better as an ecosystem that's more coordinated. And so we can build resilience in the rural communities, and this is where value chains begin. So thank you very much. A little over.
Thank you. Thank you, Courtney. Thank you, everyone, and thanks for bringing in the IFA perspective. And again, this links well in general what we discussed regarding it links well with the civil commitment, more coordination, no more initiatives, working together and trying to find a long-term solution, not only short-term ones. Before I open the floor, I would like to invite Jim Woodill, Director, Agrifood Systems and Future SAB, University of Reading, and lead of the Global Foresight for Food Initiative, as well as Senior Advisor to GDPRD, and Maurizio Navarra, Senior Partnership Officer and the Coordinator of GDPRD, to share in 1 minute each some reflections, reactions, maybe a question if you have to the panel. Over to you, Jim. 1 minute. Thank you.
Thank you to our speakers. A really important discussion. I mean, from my perspective, this just very much underscores how critical it is to be making the investments in the fundamental changes that are needed in our global food systems. I mean, David, you mentioned that we don't have a famine situation, but on the other hand, we do have a third of the world's population who can't afford a healthy diet, and these sort of pressures just undermine that further and further, and I think take us away from the investments we need to be making in long-term resilience. So I think filling the gap around the investment that is needed for wider scale food systems transformation is really critical, and I can reference you back to the Global Donor Platform's white paper from last year. And as that paper mentioned, that requires really building up the political will, and that implies having a much stronger narrative about both the risks facing food systems in the longer run, but also what are the big societal security benefits from getting our food systems right. So I think really making sure that societies more widely and our politicians really understand the issues that are being talked about today and putting it in a language that they can understand. And then I would just reinforce the message that's also been raised is that we run the big risks of coping with these short-term crises, but not building a long-term resilience that's going to be absolutely fundamental for the longer term.
Thanks so much, Jim, for restating this important point. Maurizio, over to you, please.
Thanks, Elena, and thanks everyone. Such a great and interesting conversation. I will stay within the minute. Let me pick up on a couple of themes that sit at the core of what we do at the donor platform. First, there's the issue of volatility. Now, volatility is not new. What feels different today is the systemic overlap between trade, fragmentation, energy shocks, and tighter fiscal and financial space. And that, as we know, raises a fundamental and obvious issue. If the trade disruptions we're seeing are cyclical, or if we are moving into a global food systems that is more structurally fragmented. So the question is no longer just how we respond to shocks, but how we structurally stabilize agri-food system through better coordination, smarter financing, clear incentives for public and private actors. And Marlynne mentioned that the multilateral system works as a stabilizing anchor, and that's, to me, was a very important point to hear. Linked to this, we also see that energy is one of the main drivers of food price volatility, and not so hidden driver, clearly. So it would be great to understand what it would actually take to decouple agri-food systems from fossil fuel price shocks. This was mentioned by Leonard in his opening, and whether investments in decentralized renewable energy for agriculture are being taken seriously enough. Second point I'd like to raise, and I'll close, is the point on coordination, because that is what we do at the donor platform. We often call for more coordination, but coordination of what exactly? We heard about coordination needed on policies, on finance, on political positioning. David Laborde said we need better policy coordination in general, which has been demonstrated over the last years. Now, in a context of shrinking resources, I would argue that coordination itself becomes a scarce resource itself. The question is whether we need fewer initiatives and more alignment, or more space for innovation and risk-taking. Now, from the perspective of the donor platform, our role is quite simple, and Leonard Mizzi has been very, very vocal on that at the beginning of the event. We need to continue acting as a neutral space that helps reduce this fragmentation, align incentives, and ultimately, what we need really is to lower the transaction costs across donors. Otherwise, our mandate is void. And maybe to close, if volatility is the new normal, then resilience cannot remain a side objective. It has to become the organizing principle of how we think about trade, energy, and investment in agri-food systems, which also means being more deliberate about regional integration, about what is produced where and how value chains are structured across countries. And I'll close here. Thanks very much, Elena.
Thank you. Thanks to you and Jim. Thanks to Maurizio and Jim for your thoughts and reactions to the panel. I would like to open now the floor in case there are questions online or in the room. I do see online African Development Bank. If we can give the floor, colleagues, to Mr. Edson Pizzi from the African Development Bank, who's online.
Thank you very much for organizing this session. I'll be quick and go to the point. We had some really great interventions by the speakers before. Now, Africa, I think we stand in a very unique place that we are highly exposed, to global volatility prices due to the fact that we are importing almost everything that is concerned with food production, from the food, fertilizer, fuel, agriculture machinery. So a slight price increase, somewhere else, will have a big impact on our countries. And during the last, the Russia-Ukraine crisis, the African Development Bank, designed the African Emergency Food Production Facility, which was a USD 1.5 billion facility, which focused mostly on making inputs, mostly fertilizer and seed, more accessible to countries to increase, food production and address food prices. Now we're in the process of developing a new one now with this crisis, new facility. But I think what we have learned is that we need to look at how to possibly come up with a two-track facility. One that can manage immediate shocks to keep food prices stable, while also building greater term, long-term resilience. And many of the speakers, have spoken to that. In the short term, we could provide support for access to food, fertilizer, seed, fuel, and critical logistics. And mostly this is through subsidizing the inputs that are used by the countries. But more on the longer term, it would be to look at how can we strengthen local and regional production. Sorry, my lights have gone off. Maybe it's an energy crisis. Look at more, looking at intra-African trade, storage, irrigation, agro-processing, so that the countries are less vulnerable to the external shocks in the future. And I wanted to follow up maybe with Rodrigo, where he mentioned that we need to look at that these are persistent food shocks, and how do we, address those? So I'd like to maybe hear a bit more from, from UNCTAD. How do we, really look at more the longer term? And just to follow up on what the Ambassador Tesfaye mentioned, the wheat aspects in Ethiopia, where the African Development Bank has really supported the government of Ethiopia to look more now on the longer term, so that reducing imports of critical aspects such as wheat, which is critical in Ethiopia, but at the same time, also providing local production. Thank you very much.
Thank you very much to you, sir. I'll go straight to Rodrigo, and then perhaps the ambassador who wants to react. 1 minute each, so maybe we can fit in another question before closing. Thank you. Rodrigo, over to you.
Thank you. Yes, excellent question, actually. First, just for you to let you know, the UNCTAD is producing its Commodities and Development Report 2027 on volatility. So this is something that will be available in February probably, and we are going to be looking at this issue. Now, the point about persistency is a complicated one, because normally all these facilities are thought of for a couple of months, a year or something. But when the shock is persistent, and there's quite a lot of evidence showing that energy shocks and food shocks are persistent, we just need to look at what happened during the Ukraine war, etc. So these facilities are not perfectly well suited for that. So facilities are important, but what is important too is to also strengthen the capacity of self-insurance in the country, okay? And the capacity for regional insurance. One of the initiatives that is interesting along these lines for food security is what is going on with this emergency food security mechanism that is part of the Doha Plan of Action. This is an initiative that is being coordinated by OHRLLS with active participation by all international organizations, including FAO, including the World Food Program, UNCTAD, etc. And the idea is to try to see if, for least developed countries, that are one of the most vulnerable ones, some emergency food facility can be established, either benefiting from regional food facilities, like the one of ECOWAS that works in West Africa, or whether something new, which is using, for example, a combination of virtual stocks and physical stocks. This is work in progress, but this is one tool that can be used. The second one is also the use of more innovative ways of managing shocks, in not only in the downside, but when the shock is going up. Many of the countries that are vulnerable to negative food price shocks have been in the past experiencing wounds, for example, from minerals or from energy. So building this resiliency during the outwards part of the shock is also important. So I would just leave it there in the interest of time, but happy to take it further. Thanks.
Thank you very much, Rodrigo. Ambassador, would you like to react to anything that the colleague from the African Development Bank mentioned about the experience of Ethiopia, or?
It's just one point on the African Development Bank is a very valued partner, as I said earlier. We have a project in the country for the longer haul. A new project has just been started to produce fertilizer in the country. The 2.4 billion project in partnership with the Dangote Group. It's a public-private partnership. The Ethiopian Sovereign Wealth Fund and the Dangote Group have started. And these days, projects just don't start in Ethiopia, they also finish. Project management has become a number one priority under our Prime Minister. So it's expected to come online in the next 2 to 3 years, and it will be accessible to the African Free Trade Area market and potentially starting with the neighborhood. So that's a long-term resilience aspect of what we are doing in Ethiopia.
Thank you so much, Ambassador. Colleagues, I don't know if there is maybe one burning question from the floor, and then we'll go towards the closing. Over to you if you can introduce yourself, please.
Thank you, Elena. My name is Glenn Hoods. I am with the Department of Economic and Social Affairs. I had a question really about infrastructure. I heard a little bit about infrastructure, but I'd be curious, what are the thoughts of the experts around, really how to fast track the infrastructure that is needed for improving these agri-food systems, both to enable exports and trade, but also just to create efficiencies and more profitability so that small and medium enterprises in the sector can be able to have more accessible credit for their work. Thank you.
Thank you very much, Glenn. Does anybody want to take the question? Leonard, please, over to you.
Thanks, and very good question on infrastructure, because that is what the European Union and Team Europe are trying to do in terms of Global Gateway. It's hard infrastructure, soft infrastructure. So what we are trying to do is, for example, if you want green ammonia, whether it's in Egypt, Ethiopia, Nigeria, Kenya, or the Namibian case, you need access roads, networks, port infrastructure, water and water-related infrastructure, the skill set as well, which is soft infrastructure. And this sort of hard, soft infrastructure is critical for agri-value chains, including blending the energy dynamics into a trade dynamics. And what the ambassador said is critical. What is important is, and again, just not to repeat, the pharma case, the critical raw material case, the hydro case vis-a-vis the agri-food system case is, how can we have the public development banks to the risk at scale the hard, soft infrastructure in a way to create regional markets? Because otherwise it becomes a very fragmented approach in the continent. You can't have 50 or 54 fragmented markets if you want to have growth jobs at scale. And I think that is what we are trying to do on strategic corridors, that all the infrastructure has a backbone which links also the rails, the roads, the ports, in a way where access, and when you have disruption, you have alternative access schemes, which are also part of the continental free trade area within the African continent. But I think what we need also to do as a global donor platform with all of you is to go into depth of how, for example, the fertilizer dynamics, including the green fertilizer narrative, can benefit not only the countries and the investors, because we didn't discuss about the role of the private investors in terms of what they expect in terms of hard and soft infrastructure, but also the beneficiaries, the small farm holders, because there is also experience that you can produce a lot of fertilizers in a given country, but that country, in a market-oriented approach, exports everything or most of everything to the best bidder, not necessarily benefiting local or regional markets around that market. So I think that also needs to be analyzed. However, investment in infrastructure helps that hub and spoke not to happen or not to be at scale compared to what's happening today.
Thank you so much, Leonard. Maybe one 30-second reaction, David, and then Rodrigo, and then we'll go to the closing. David, over to you.
Yes, no, I want to say the question of infrastructure is pretty essential, and we see it in particular during this crisis. You know, how, for example, you need to shift from maritime transportation to land transportation. And have you invested in railroad, or do you need to get trucks that will run on diesel? If you are not ready, that's where you pay a high price. Now, the problem is that most people will have forgotten and will say, okay, we don't want to invest in these long-term things. But infrastructure has a high rate of return. And also because they are public goods, they benefit they benefit, as you said, also SMEs. Now, I want us to complement also what Leonard has said on soft infrastructure, and I would like to emphasize the role of data and information. That is also a key element, including in the pre-competitive space for the private sector, to know the prices, to know the availability of product. You know, we are today in another fertilizer kind of tight situation, potentially in Africa crisis. 3 years ago, we were saying we need to monitor prices of fertilizer in Africa. It has been done during 6 months. It has stopped. Now, if we say, what is the price of fertilizer in more than 50 African countries, we answer, we don't know. So data infrastructure is key for public decision maker, should be key for IFIs, and should be key for private actors. And this basic information is public good.
Thank you so much, David. Rodrigo, over to you. 30 seconds if you can.
Even less. I just want to complement what both Leonard and David said. Infrastructure is essential for competition. You cannot have competition without infrastructure. There's a very clear case with fertilizers. The East African Community, for example, launched an investigation into price of fertilizer at the beginning of 2025. And one of the things that have been found in South Africa, in the South Africa region countries in East Africa, is that this is connected to the availability of port facilities, of transport facilities, and who controls them. So without competition policy, any change in the foreign price of imported products does not necessarily need to translate into a reduction in cost and an increase in yields. So infrastructure is essential, and there's a huge finance gap in all developing countries. So thanks.
Thank you so much, Rodrigo. Thank you, everybody, colleagues, our distinguished panelists, our co-hosts, the GDPRD colleagues in the room for the great discussion. We're headed to the close of our session. I would like to invite Mr. Vincent de Graaf from the Kingdom of the Netherlands Permanent Mission here in New York to deliver the closing remarks. Vincent, over to you. Thank you.
Thank you, Elena, and thank you also IFAD for convening this very stimulating discussion. It's an impossible task to summarize. I will not attempt that, and I also know that time is precious. So just a couple of points from my side and from the perspective of the Netherlands. All of you have noted the many crises facing us in this area in the last 20 years, and we wonder if this is a poly crisis, it's a sequential crisis. Some of you have noted that the system has shown surprising resilience. However, we are testing it possibly beyond the limit. And it's exactly this combination of man-made crisis and natural disasters which can prove extremely dangerous and reinforce each other into a vicious circle which threatens to spin out of control. That would have disastrous consequences for the people involved, first and foremost. It will lead to a vicious circle of food insecurity, famine, conflict, migration, which will then prompt more restrictive responses, which could actually worsen the crisis. Now, we've also heard a lot on the solutions needed, both in response to individual crises, but also offering an approach in increasing resilience. And I was very happy to hear that multilateralism remains a key component of that, a crucial component. And that's not only coming from international organizations, but definitely also from states in different parts of the world. We, as the Netherlands, very much welcome IFAD's response, combining both responses to individual crises, but also building resilience. You've shown this with the Rural Poor Stimulus Facility, with the IFAD Crisis Response Initiative in response to the Russian invasion of Ukraine. And you're also working on that with a more long-term approach. Crises have become sadly the new normal, quote unquote, and building resilience should be integrated in all regular IFAD programs. And on that basis, we support IFAD's proposal to have resilience as one of the 3 central pillars of your new next replenishment, in addition to markets and rural employment. So for us, this nexus, reinforcing the nexus of humanitarian development and peace, is absolutely crucial. And as IFAD's partner, we stand ready to support you in that, bringing in Dutch knowledge, know-how, and also entrepreneurship. Now, finally, let me turn briefly to the GDPRD as co-chair together with the European Commission this year and next. And let me also refer to the 4 priority areas that closely relate to many of the issues mentioned. First of all, return on investments in agri-food systems. This is very much linked to what was mentioned on the need for financing, for innovation. We think more can be done. There's a lot more potential in strengthening the value for money narrative for agri-food systems. And this is at any level, from the local level to the global level. Second, the link to multilateralism and multi-sector policy engagement. We've noted the importance of a stable framework, coordination. You can't do any of that without solid multilateral components. Third, AI and data for decision making, and noted multiple times before we draft our responses, we need a very clear insight in what is actually happening and more or less in real time. And then finally, blended finance and categorical capital, again linked to innovation. So we've heard problems. We have heard a lot on solutions. I think we have a very clear picture on where we should go and what is needed to make that happen. So let me stress the partnership of international organizations, of member states, and the agri-food sector.
Thank you very much. Thank you to you, Vincent. Just to say once again, thank you to the audience, the panelists, our speakers here and connected, and I wish you a very good rest of your day. Thank you very much.
Goodbye.
Thank you.
Bye,
Thank
everyone.
you so much.
Very shortly.
Bye-bye.
Bye, everyone.
You.
Yes.